Individual forex traders win more, lose less money trading forex once they understand these 8 things hidden in plain sight, says a former proprietary forex trader who worked as head of forex trading at local and international banks in Malaysia. In an interview by The Edge, a 30 years experienced forex trader for financial institutions, Edwin Goh, exposed the controversial approach winning forex traders use to get them an unfair winning advantage over others. First, he spilled the huge underground secret how big guys trade forex. Let's start with the banks. Banks trade forex as they help their multinational corporations and SME customers buy US dollars to pay suppliers and vendors. At the same time, sell US dollars to bring back the profits generated to the home country. Banks, as the middleman, makes small profits consistently from the price differences, or aka the spread. This is no different than how your money changer makes money. It could be like just 4 ringgit and 10 versus 4 ringgit and 15. There's a 5-cent difference, but multiply that 5 cents by 1 billion. You get 50 million in the money guarantee.
Oh my god! Wow!
Banks have zilch kosong financial risk, in this case being the forex broker. And that should also explain why forex brokers with annoying ads like Okta FX or Triumph FX make money too. And that is how they have unlimited budgets to have their ads shown in your face every single day, multiple times a day. But wait, just this little problem. See this.
Warning just in. Both Bank Negara and SC now said Okta FX is super haram.
But banks do not just stop there, because this is how they maximize profits, minimize losses from any forex trades they are doing. Impose stringent limits on what currency pairs their forex traders can or cannot play with, apart from the upper limits of each transaction value. Say a forex trader in a Malaysian-based bank can only dabble with USD, ringgit currency pairs because firstly, that is what the customers want, and secondly, they are familiar with the supply and demand dynamics between US dollar and ringgit. They do not usually touch currency pairs unfamiliar to them. Currency pairs like pound sterling, Swiss francs, or even Canadian dollars. You increase your chances of success in trading any financial assets when you focus only on what you know the best and where your strength lies. However, knowing only what I have just explained would not matter if you do not understand this next step I am about to share with you. In fact, if you do not listen to this next explanation on the forex broker you are using, you would have wasted your time watching this video so far. Check that your forex broker platform is not trading against you. I see so many people literally have no idea on what I am saying here, and it made me want to bang my head on the wall. Say, if you are trading US dollar and Japanese yen currency pairs, for you to win the trade in whatever direction you are playing, someone has to lose. In other words, whenever your prediction or bet in forex trading is right, someone has to be wrong. So they call it zero-sum game. Now, likewise, you lose money in forex trading when someone on the other side is right and it needs you to be wrong. And that someone on the other end could likely be your very own forex broker or platform that could be manipulating you with the wrong information. So, say you think US dollar may weaken against Japanese yen, making you place the trades or the bets accordingly, while the broker is actually betting on the exact opposite. So, you lose your money to your very own forex broker on top of paying them a transaction fee. How crazy is that? You may wonder, can I beat the broker at their own game since it's a 50-50% chances? Of course you can, provided you have this one thing: unlimited capital. Just like you play against the house, say in Genting or Vegas, the house can lose 20 times in a row with $50,000 bets every time, and they could have lose amounting to 1 million. And guess what? They can still continue to play because they have unlimited cash coming in from other players. So the question is, can you afford to take 20 losses in a row without emptying your bank account? If no, well, congratulations, you are still in the game. Otherwise, when your bank account is empty, you are out. KO! Total irrecoverable capital loss. And you know what is even more wicked? There's a dark, dirty reason why your forex broker are so generous, giving you huge leverage. Because this is how they make bank from their customers or users. Do not skip this part, or else you will be in a lot of shock and pain. You start with $1,000, but with a 100 times leverage means you can trade $100,000. It's all fine and dandy when, say, the US dollars Japanese yen currency pairs moves 1 pip, 0.01% in your favor. 100,000 traded plus 1% gain means that your balance now becomes 101,000. Now that is like a 100% return from your actual capital of just $1,000. Double your money instantly. Versus you could only have made $10 if you did not use this 100 times leverage. Conversely, this is what happens if you are wrong. When you leverage 100,000 drops to 99,000, say your margin kicks in, because this literally gives your forex broker upfront permission to take away your forex trading capital. Your entire 1,000 capital could be wiped out overnight as your forex broker force sells your holdings and pockets your capital. Now, if you think this is the worst thing that can happen to you, wait until I explain what is even 10 times worse. Now, suppose you think, well, that won't happen to me because, I can set a stop loss order for this USD Japanese yen currency pairs of, say, 142.00. So you won't be hit by a margin call, right? When, the price, in case when you're sleeping, it drops below that. But your forex broker end up executing your sell order at 141.90, which then triggers a margin call. And you realize that after you woke up the next morning, you lost money, you call up your forex broker, you bang your fist on the table. Why? I thought I set a stop loss sell order? And your forex broker could reply, well, we are terribly sorry, but the price just gapped down. The market is very volatile. And 141.90, what's the best price we can fetch you? Yada, yada, yada. You suspect your forex broker is lying to you. So you may want to lodge a complaint. You're very, very unhappy. In normal circumstances, your recourse is the financial market regulator. Now, you are in Malaysia, the Security Commissions or the Bank Negara, right? But then you realize the forex broker is not based within Malaysia. It is halfway across the globe in some remote countries you might not even have heard of. Now, adding salt to the wound, the regulators have been putting this forex broker in the investors alert list and in this consumer alert list since aeons ago. So if you are still so naive and you go to the regulators and you try to lodge a complaint, I tell you, this is the best reply you will get from them. I told you so. Now, assume you manage to get all these issues aside. This is the next juicy thing about forex trading that you need to understand. Else don't cry father, cry mother when you lose money, is that you need to make sure you have a PhD level qualifications. Yes, you heard that right. The forex trading strategies of prominent global funds like the quantum funds of the world, or even quant-focused hedge funds like the likes of Renaissance Technologies, are researched and executed by the brightest minds from MIT, Harvard, Stanford. So in order to win more than you lose, you have to gang up with the top minds in the trading community, so you stand a chance to win against your counterparty in any forex trading. Otherwise, you will be like a noob, jago kampong athlete competing against Cristiano Ronaldo, Usain Bolt, or even Lee Chongwei. The thing is, even after learning all these powerful insider secrets, you might be thinking, should I just hire, successful forex traders for higher chance and consistency of winning forex trades? Believe it or not, the answer to that question is right here in this video. So make sure you watch this next.